Welcome to JS Online Teachers. Today in accounts we'll be looking at final accounts. So final accounts is defined as a summary of financial reports that are prepared by business, organization and businesses at the end of the year. And these financial accounts actually shows two things. They actually show the financial performance of the organization. They also show the financial position at the end of the financial year. And the final accounts are also referred to as financial statements. So these financial reports are called final accounts because they are prepared at the end of the financial year. And we must take note that all the information that is recorded in the financial statement is only prepared after we have prepared the trial balance, or the information is obtained from the trial balance. In fact, we can say that these financial statements are prepared after all the adjustments have been made to the balances that appear in the trial balance. So those are the points that you must take note when we are looking at final accounts. So let us write down some notes. So I've actually said final accounts is a summary of financial reports that is prepared by business enterprises or organizations. At the end of the year, so this is the definition of final accounts. So we have actually said that these final accounts are also referred to as financial statements. So we can say final accounts are also referred to as financial statements. And I actually said that these final accounts actually shows two things. They actually show the financial performance. They also show the financial position. So we can say they actually show two things. So the financial performance and financial position. And we have also said that the financial reports are called final accounts because they are prepared at the end of the year. We have also mentioned that the information that is prepared in the financial statement, or the information that appears in the financial statements, is obtained from the trial balance. So those are the points that we have actually mentioned with our introductory part for final accounts. So let us look at the types of financial statements. So the types of financial statements, so we have three types. So the first one, we have the income statement. So this income statement is also referred to as the trading profit and loss account. So we can say trading profit and loss account. Then we also have the balance sheet. Then we also have the cash flow statement. So we'll start with the first financial statement, which is the income statement. So we're going to start with our income statement. So the income statement is also referred to as the trading profit and loss account. That's the first part that you need to take into consideration. So this is referred to as the trading profit and loss account. So the income statement actually shows the gross profit or loss of the business. It also shows the net profit or loss of the business. And this income statement is actually divided into two parts. It's actually divided into the trading account. It's also divided into the profit and loss account. So I've actually mentioned that the income statement actually shows, so this shows gross profit or loss. It can also show, it shows the net profit or loss. And I've actually said the income statement is divided into two parts. So this is divided into two parts. So two parts. And I've actually mentioned is divided into the trading account So the trading account, this actually shows the gross profit or loss. Then it's also divided into the profit and loss account. So the profit and loss account, this actually shows the net profit or loss. So here, since we have actually mentioned that the income statement is also referred to as the trading profit and loss account, we have also said that this actually shows the gross profit or loss. It also shows the net profit or loss. And we have actually said that this income statement is divided into two parts. So we have the trading account, which actually shows the gross profit and loss. We also have the profit and loss, and this actually shows the net profit or loss. And since we have actually talked about this, we are going to go further and we're going to talk about the trading account. So the trading account actually shows the gross profit or loss of the business. So those are the most important things that you need to take into consideration. So this actually shows the gross profit or loss of the business. And we actually know that trading actually involves selling and buying of goods and services. That means that all the transactions that involves buying and selling of goods and services are recorded into the trading account. So the gross profit can be, the gross profit is found when the net sales is greater than the cost of sales. Then the gross loss is actually found when the cost of sales is greater than the net sales. So the most important formula that we need to take into consideration when we're talking about the trading account, we know that this actually shows, this shows the gross profit or loss. And the formula that we can use when finding the gross profit or loss, we actually say, so we can say net sales minus cost of sales. So this is the formula that we use, and actually said that the gross profit is found when the net sales is greater than the cost of sales. Then the gross loss is actually found when the cost of sales is greater than the net sales. In other ways, we can say that the gross profit is found when the selling price is greater than the cost of goods sold, or we can also say that the gross loss is found when the cost of goods sold is greater than the selling price. So those are some of the information that you need to take into consideration. And since we have written down our first formula, we have to break down this formula. So we are going to start with net sales. So the formula for net sales, this is equal to sales minus sales retains. Sales retains is also referred to as retains inwards. So this is the formula for net sales. So sales minus sales retains or retains inwards. So what are sales? So sales is the value of goods that have been sold by the business, and these goods were actually bought by the business for resale. So that's sales. Then for the sales retains or retains inwards, this is the value of goods that have been retained to the business by its customers. So the difference between sales and sales retains gives the net sales. Where you have questions, please ask in the group. So with the income statement, we started with the trading account, and we said that the trading account shows the gross profit or loss of the business, and we said that the gross profit or loss of the business is equal to net sales minus cost of sales, and we said that our net sales is equal to sales minus sales retains or retains inwards. So these are the formulas that we use. So we actually say that gross profit or loss is equal to net sales minus cost of sales, and we said that net sales is equal to sales minus sales retains or retains inwards. So since we have broken down this part of the formula, the first part of the formula, let us break down this other part of the formula, which is cost of sales. So the formula when finding cost of sales, so cost of sales is equal to, we're going to have our opening stock plus net purchases then plus carriage inwards then plus wages then minus closing stock. So this is the formula that we use. So cost of sales is equal to open bracket opening stock plus net purchases plus carriage inwards plus wages close bracket minus closing stock. So for the opening stock, this is the value of stock that the business brings forward to the current period from the previous accounting period. So for example, if the stock for last year when the business was closing was at 20,000, that means that and if we say that this 20,000 kwacha was for last year, which means this is 2022. That means that this year, which is 2023, this is going to be the opening stock. And 2023, the opening stock is going to be 20,000. So this is going to be the opening stock. So the opening stock is just the value of stock that the business brings from the previous accounting period. That's opening stock. Then for the net purchases, let us look at net purchases. So for the net purchases, this is found by saying purchases minus purchases returns So purchases returns can also be referred to as returns inwards. So for the purchases, we can say this is the value of goods that the business buys for resale. So the value of goods that the business buys with the intention of reselling, that's purchases. Then for the returns inwards, this is the value of goods that is returned to the suppliers. So when we say purchases minus purchases returns, we actually find the net purchases. So let us now look at carriage inwards. So carriage inwards is the amount of money that is spent on transporting goods or bringing the purchased goods into the business. And I'll give an example. For example, if we have company A, and this company A is located in Kafue, and it buys goods which it has to resell, and these goods are bought in Kawe. And for example, these goods are worth 50,000, and in transporting these goods which are worth 50,000 from Kawe to Kafue, this company A spends, for example, a 1,000. That means that 1,000 is the amount of money that is used on transportation, and this is going to be referred to as carriage inwards. And this money is going to be spent by company A in transporting goods worth 50,000. So this 1,000 has to be added to purchases. So that's the term carriage inwards. Let us look at the other term that we have in the formula. So wages. So wages is the irregular payment or non-fixed payment that is paid to workers. And this is paid to workers according to the amount of work that they do or according to the duration of time they work. So this is for wages, it is irregular and non-fixed. Non-fixed payment given to workers, and this can be according to the duration or the amount of work. So that's wages. And this type of work can be loading or offloading the goods. So for example, if these types of goods, when loading them and offloading them into a truck, it actually costed company A, for example, it actually costed them a 500 kwacha. That means that this 500 kwacha, we are going to count it as wages, and this has to be added to purchases. So that's wages. But sometimes when you're writing down your financial statements, you're going to discover that you'll be given, for example, this type of account, you'll be given wages and salaries. That means that this type of account is an indirect expense, and this has to be shown in the profit and loss account. But in a case whereby you have been given wages, this has to be shown in the trading account, and it has to appear on this formula. Then in this equation or in this formula, we have closing stock. So closing stock is the value of goods that this is the value of stock that has remained unsold during the period. So that's closing stock. So let us now look at cost of goods available. So the formula that we use on this one, we are going to say opening stock plus net purchases plus carriage inwards plus wages. So this is the formula that we use when calculating cost of goods available. Then from this formula we can say that cost of sales can be calculated by saying cost of goods available minus closing stock. So this is just the introductory part of the trading account. I hope like everything is clear, but where you have questions, please ask in the group. So let us continue looking at the trading account, and for us to solve this problem, we are going to use the formulas that we have talked about. So we have the question that we need to solve, and for this question we have opening stock amounting to 150, we have purchases amounting to 45, we have sales amounting to 550, we have retains inwards amounting to 50, we have retains outwards amounting to 5, we have carriage inwards amounting to 25, we have wages amounting to 20, we have stock, closing stock amounting to 25. Then we are supposed to find the net sales, net purchases, cost of goods available, cost of sales, and gross profit. So we are going to start with our A. So our A, we are supposed to calculate the net sales. And for us to calculate the net sales, we know that we use the formula sales minus sales retains. And we know that our sales retains can also be referred to as the retains inwards. So the retains inwards. So we know that sales we have 550 there. So we're going to say 550 minus retains inwards. Retains inwards we have 50. So 550 minus 50, our answer is going to be 500 kwacha. So that's going to be our net sales. So let us find our net purchases. So net purchases, we know that we use the formula purchases minus purchases retains, and purchases retains can also be referred to as retains outwards. So say retains outwards. And purchases, what do we have? Purchases, we have 45 there. So say 45 minus retains outwards. Retains outwards, we have 5 kwacha. So if we say 45 minus 5, we're going to have 40 kwacha. So that's going to be our net purchases. Then let us find the cost of goods available. So the cost of goods available, we use this formula. We say opening stock plus net purchases plus carriage inwards then plus wages. So this is the formula that we use: opening stock plus net purchases plus carriage inwards plus wages. So we are going to say our opening stock. Our opening stock, we have 150. So we'll say 150 plus net purchases. Net purchases, we had calculated 40 there. So we'll say 40 plus our carriage inwards. Our carriage inwards we can get from our equation. We know that's 25 plus wages. Wages, we have 20. So we are going to say 150 plus 40 plus 25 plus 20. Our answer here is going to be 235. So that's going to be cost of goods available. Let us find our D, which is cost of sales. So cost of sales is calculated by saying cost of goods available minus closing stock. Minus closing stock. So here we can say cost of goods available. Cost of goods available we had calculated as 239. So we'll say 235 minus closing stock. Closing stock we had calculated closing stock we have in our question, which is 25. So we'll say 25 there. So we can say 235 minus 25. Our cost of sales is going to be equal to 210. Then let us find the gross profit. So we know, we say our gross profit by saying net sales minus cost of sales. So we can say our net sales, net sales there we had calculated as 500. So we say 500 minus cost of sales. Cost of sales we had calculated as 210. So 500 minus 210 there we have 290 kwacha. So that's how you can calculate the net sales, the net purchases, cost of goods available, cost of sales, and the gross profit. And to go through these formulas again, we actually said that net sales is calculated by saying sales minus sales retains, and sales retains are also referred to as retains inwards. Then for net purchases is purchases minus purchases retains, which are also referred to as retains outwards. Then we have cost of goods available. So for cost of goods available, the formula is opening stock plus net purchases plus carriage inwards plus wages. Then we have cost of sales. So for cost of sales is cost of goods available minus closing stock. Then for gross profit is the formula is net sales minus cost of sales. So that's how you can find this question. Where you have questions, please ask in the group. So this program has been brought to you by Jos Wale. If you want to get connected with me, you can actually check out my social media platforms. I'll meet you next time, and peace and God bless.